Solved problems. Projected income statement with missing amounts. Problem. Projected income statement. VV Stores is a clothing retailer situated in Guyana. Required 1.1. Explain the difference between a cash budget and a projected income statement. 1.2. Complete the debtors collection schedule for June to August 2022. 1.3. Complete the missing amounts labeled A to K in the projected income statement for July and August 22. Show calculations to year-end part March. Information. June, July, August 2022. Sales 240,000 for June, 250,000 for July, and for August A. Cost of sales 150,000 minus July for July B. For August it is C. Gross profit 90,000 for June. For July how much? Operating income 13,000 for June, 13,200 for July, 13,400 for August. Rent income 8,000 for June, 8,000 for July, 8,000 for August. Commission income 5,000 for June, 5,200 for July, 5,400 for August. Gross operating income 103,000 for June, and for July how much, and for August how much. Operating expenses 56,250 for June, and for July and August how much. We need to find out. Water and electricity 5,000 for June, July and August per each month. Bad debts 4,200 for June. For July it is question D. For August question E. Sales and wages 31,000 for June and July, and for August it is F. We have to find out. Sundry expenses 6,760 for June, 6,760 for July, and for August it is G. We have to find out. Advertising 7,200 for June. For July and August H and I are the questions we need to find out. Depreciation 2,100 for June, 2,100 for July. For August J we have to find out. Operating profit 46,750 for June, and for July and August we need to find out after obtaining the missing figures A, B, C, D, E, F, G, H, I, J. Interest income 875 for June, 875 for July, and for August K we need to find out. Net profit for the year 47,625 for June, and July and August we need to find out. Additional information given. For A, sales are expected to increase by 5% per month. B, credit sales amount to 40% of total sales. C, debtors are expected to settle their accounts as follows. 50% settle accounts in the month of sale and receive 5% discount. 45% settle accounts in the month of the following sale. Provision is made for 5% bad debts. D, the business applies a 60% markup on all items sold. E, the business currently employs one manager at a gross salary of 15,000 as well as 2 shop assistants who are paid equally. The business plans to employ a third shop assistant from August at the same rate as the 2 current shop assistants. F, sundry expenses are expected to increase by 200 from 1st August 2022. G, advertising costs will remain fixed at 3% of sales. H, the current fixed deposit of 210,000 at an interest rate of 5% per annum will mature on 31st July. 60,000 will be withdrawn to purchase additional equipment on 1st August 2022. I, depreciation will be provided at 20% per annum on cost. The business has equipment valued 126,000 on 1st June 2022. Solution 1.1. The differences between cash budget and projected income statement are mentioned below. Cash budget, income statement. Cash budget, cash sales only. Income statement, both cash and credit sales. Cash budget, collections from debtors. In the income statement, no debtors collection available. Cash budget, cash purchases of trading stock. Income statement, no purchase of trading stock. Cash budget, payments to creditors. in income statement, no payments to creditors. Cash budget, cash purchase of fixed assets. In income statement, no purchase of fixed assets. In cash budget, cash receipts from sale of assets. Income statement, only profit or loss on sale of assets is available. Cash budget, cash raised from issue of shares. In income statement, no issue of shares. In the cash budget, cash paid to shareholders for dividends. In the income statements, no dividends. In the cash budget, cash drawings by the owner. In income statement, no drawings. In the cash budget, no depreciation. In the income statement, depreciation. In the cash budgets, no bad debts. In the income statement, bad debts available. In cash budget, no trading stock deficit. In income statement, trading stock deficit is mentioned. In cash budget, donations of cash only. In income statement, donations of cash and trading stock. Cash budget, prepaid expenses but no accrued expenses. In income statement, accrued expenses but no prepaid expenses. In the cash budget, income received in advance but no accrued income. In income statement, accrued income but no income received in advance. In cash budget, cash raised from taking out a loan. In income statement, no loans. Loan repayments are plus interest. In income statement, interest on loan payments only. In cash budget, maturity of fixed deposit plus interest. In income statement, interest on fixed deposits only. 1.2. The debtors collection schedule for June-August is given below. June to August is given below. Particulars: June, July, August. Sales: June 240,000, July 252,000, August 264,600. Credit sales: 40% of sales, 96,000 for June, 100,800 July 22, 105,840 August 22. Collection June sale: in June 48,000, in July 43,200. Collection of July sale: in July 50,400, in August 45,360. Collection of August sale: in August 50% of 105,840, 52,920. Total collections: in June 48,000, July 93,600, in August 98,240. Solution 1.3. Finding out missing amounts labeled A to K in the projected income statement for July and August 2022. Workings. Solution. Workings. For A, sales during August 2022. Sales during July 2022 is 252,000. After 5% increase, 252,000 by 100 into 105 is equal to 264,600 is the sales for August. So we put 264,600. So we put 264,600 in August against sales. For B and C, cost of sales July and August. Sales 252,000. Sales for August 264,600. Markup 60%. Cost of sales. Sales by 160 into 100. 157,500 for July. 165,375 for August. So we put the figures against cost of sales. For D, bad debts for July. Bad debts for June 2022 as given are 4,200, that is 5% of credit sales for April 2022. Therefore, credit sales for April is equal to 4,200 by 5 into 100 is equal to 84,000. Credit sales for May is equal to 84,000 into 105 by 100, 88,200. Collection schedule for the above is: in May 44,100, in June 39,690. Bad debts for July is equal to 4,440, 5% of 88,200. So we put 4,410 against bad debts in July column. E. Bad debts for August 22. Sales June 240,000, July 252,000, August 264,600. Cost of sales 40% of sales is equal to 96,000 for June, 100,800 in July, 105,840 in August. Collection schedule for June credit sales 50% 48,000 and June credit sales in the month of July 43,200. Credit from credit sales 5% in the month of August is 4,800, 5% of 96,000. So we put 4,800 bad debts in August column. Missing figure at F. Salaries and wages for June and July. Manager salary 15,000. Shop assistant salary 2 assistants at 8,000 each 16,000. Total salaries for the month of July 31,000. For the month of August, manager salary 1 15,000 15,000. Shop assistants 3 assistants at 24,000. Total salaries 24 plus 15 39,000 for the month of August. Let us put 39,000 against the salaries and wages in the August column. Missing figure at G. Sundry expenses for the month of August. Sundry expenses for July 6,750. Increased by 200 from 1820 to 200. Sundry expenses for August 6,950. So let us put 6,950 against the sundry expenses in August column. Missing items at H and I. Advertising costs are 3% of sales. Sales 240,000 in June, 252,000 in July, 264,600 in August. Advertising costs are 3% of sales is equal to 7,200 in June, 7,560 in July, 7,938 in August. So July, let us put respective figures against advertising. 7,560 for July, 7,938 for August. For missing item at J, depreciation for the month of August. Cost of equipment 126,000. Depreciation at 20% per annum. 126,000 by 100 into 10, 100 into 20, 25,200. Depreciation each month 25,200 by 12, 2,100. Let us put 2,100 against the depreciation item in the column August 22. Missing item at K. Interest income. Fixed deposit amount 210,000 less withdrawal for purchase of additional equipment 60,000. Balance amount in fixed deposit 150,000. Interest rate per annum 5%. Interest income for August is equal to 7,500 by 12, 625. So let us put 625 against interest income in the August 2022 column. So finally, when we put all the missing items A to K in the projected income statement, it will appear like this. Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.